Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to be back with you today to break down the latest action in the markets. We've got a packed day with some critical updates from the Fed, major earnings on the horizon, and a market that's showing mixed signals amidst global tensions. So let's dive right in and unpack what's driving Wall Street for long-term investors like us, while also touching on some short-term moves to keep an eye on. First up, let's talk about the big news from the Federal Reserve. Today marked Jerome Powell's final meeting as Fed chair, and as expected, the Fed decided to keep interest rates steady in the range of 3.5 to 3.75%. What's interesting here is the rare split among policymakers, with a notable dissent for a rate cut, signaling some underlying tension about the economic outlook. Powell also announced he'll stay on as a governor with a low profile after his term ends mid-May, citing legal concerns and ongoing probes. Meanwhile, Kevin Warsh cleared a key Senate hurdle to replace Powell, but his rejection of forward guidance could mean more volatility ahead for markets. For us long-term investors, this transition at the Fed is something to watch closely. Policy shifts could impact everything from borrowing costs to market sentiment over the next few years. Turning to the markets, it was a bit of a mixed bag today. The S&P 500 dipped slightly by about 0.04%, while the Nasdaq eked out a tiny gain of 0.04%. The Dow Jones wasn't as lucky, sliding 0.57%, and the Russell 2000 followed suit with a 0.6% drop. Volatility is definitely in the air, with the VIX jumping over 5%, reflecting some investor nerves ahead of major earnings and ongoing geopolitical risks. For long-term players, these small daily swings are noise, but they remind us to stay focused on broader trends and not get rattled by short-term uncertainty. Zooming in on the S&P 500, we're seeing sideways movement as traders brace for key earnings from the Magnificent Seven and digest the Fed's latest stance. This kind of consolidation isn't a bad thing for us long-term investors. It can set the stage for the next big move if fundamentals hold strong. Over on the Nasdaq, tech is holding its ground with a slight uptick, despite some concerns about AI spending peaking. Analysts are still bullish, projecting a potential 40 to 50% rally in the sector based on contrarian indicators. For us, this reinforces the importance of staying invested in tech for the long haul, even if short-term pullbacks happen. Let's check out some of the big movers today. On the winning side, Intel led large-cap gainers with a solid jump, alongside Advanced Micro Devices, showing strength in the chip space. Spotify and Corning also posted nice gains, reflecting diverse sector momentum. These moves highlight opportunities in tech and consumer sectors for long-term portfolios, especially as AI and digital trends keep driving demand. On the flip side, Tesla took a hit, sliding over 5% today, likely tied to ongoing delivery and production concerns. Other notable losers included ASML and GE Aerospace, reflecting some pressure in tech and industrial spaces. For us, these dips could be buying opportunities if the fundamentals remain intact, something to research further for long-term holds. Among the market movers, Nvidia continues to dominate trading activity with a slight uptick, while Tesla's drop kept it in the spotlight for the wrong reasons. Intel also saw heavy volume on its gains, showing investor interest in semiconductors. These names are key to watch for long-term trends, especially as AI and electric vehicles shape the future. Looking at the most active stocks by volume, Nvidia and Tesla again lead the pack, alongside names like Intel and Nike. High volume often signals strong investor sentiment, whether bullish or bearish, and for us, it's a reminder to focus on liquidity when building positions for the long haul. Now, let's talk earnings, because it's a big week. We've got heavy hitters like Microsoft, Meta, Amazon, and Apple reporting soon, alongside ExxonMobil and Chevron later in the week. These results could set the tone for their respective sectors, especially tech and energy, which are critical for long-term growth strategies. Already, we've seen strong beats from companies like Seagate and Bloom Energy, with Bloom surging over 20% on a blowout quarter tied to AI infrastructure demand. Starbucks also impressed with a solid earnings beat, lifting its outlook. These early results suggest resilience in key areas, even amidst economic uncertainty. You can find exclusive earnings transcript summaries on MarketSnap to dive deeper into these reports and what they mean for your portfolio. Looking at the past week's top performers among large caps, Garmin stole the show with a massive gain, followed by Lumentum Holdings and AppLovin. These moves underscore the strength in tech and consumer discretionary, sectors worth considering for long-term exposure. On the other end, Genuine Parts took a big hit over the week, alongside Rivian and Blue Owl Capital. These declines might signal short-term challenges, but for us, they're a chance to reassess if these names fit into a long-term value play. Sector-wise, industrials led the pack over the past week with a nice uptick, followed by consumer cyclical stocks. Energy also showed strength, likely tied to rising oil prices amid geopolitical tensions. These trends are worth noting for long-term sector allocation. On the weaker side, healthcare lagged behind, with utilities and financials also showing softness. For long-term investors, these underperforming sectors might present contrarian opportunities if macro conditions improve. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and I hope this breakdown helps you navigate the markets with a long-term perspective. Be sure to stay engaged with our daily summaries and dive into our SWOT analyses for deeper insights on key stocks and sectors. See you tomorrow for more actionable updates.